Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Thursday, November 14th, 2024. Well, I suppose now that CPI and PPI are both out, I was hoping that the markets would return to a sense of more normalcy, but that didn't necessarily happen today, with it continuing to be led via the Mag 7, basically, for starting with the NASDAQ. It's the Mag 7, I would say. Now, having said that, it continues to be like Tesla versus Apple and the rest of the gang, as we're seeing preparation for tomorrow's expiration, which is now promising to be uh, pretty big. And also, I just think year end. So a lot of the options that are going to be expiring tomorrow may be repositioning things as we move towards year end. Now, beginning with the NASDAQ, I'm going to stick with the hourly chart because above that, I don't really have any changes, and we're just dealing with this minuet wave 4. It continues to move lower. And so really what I've come down to is, like, some people may call it a WXYZ or WXY, and then yes, a Z at the end. I'm now counting it as a triple ABC. And so that's how they devised the WXY and then the WXYZ, or the XY and Z, all those together, is because of it either was a double ABC or a triple ABC. So again, you can do it either way, and I think we're going to come out the same way. But if I just do it with an A, and then we have, that would be an ABC, and then an X, and then an ABC, and then another X, and now we have an ABC. So, and you can see that here, this is almost, it looks like a Y, right? And this looks like W's, and this looks like a Z. But they're not in the right order, to be honest with you, right? It should be X, Y, Z. And maybe that is also possible as well. Now, leaving that aside, we are now quickly approaching, and I think we may have already touched, well, we got down to 37 and a half. That support is at 935, 936. So, but I don't think that's going to be all. So I have additional, if this is an A, B, and we're going to measure out the C wave, it will be 1.618 times the length of the A wave at 20,901. We break there, then we're dealing with the next level up, again, within that minuet fourth wave, where it'd be 50%, and that's at 20,810. Now, on the hourly basis, we've come down and we've broken below the 200 period moving average. Now, I'm going to quickly just run this up to the daily chart and see if what damage may be being occurred here. As I had suspected, we broke below the 8, the daily 8. That gave us a little extra punch towards the end of the day, and then in that extra hour. But we are through, we're breaking below the 0.382 retracement, the normal retracement for a fourth wave. And so we've got to leave the door open that we're going to slip and drop down to the 50%. I leave that 618 because that's the area where I don't really want to see it come down flying through there, because that's going to then shift the whole thing. And up until this point, I remain with the thought that we still have a minuet wave 5 up to finish minuet wave 5, minute wave 5, minor wave 5, intermediate wave 3. Now, the market is getting, again, prepared for tomorrow's expiration. From what I understand, and I just go and I look through several of the individual stocks, the components, particularly the Mag 7, and there's some heavy levels of calls and there's some heavy levels of puts, and there's a lot that can kind of happen. And both, if we look at volatility, there, within the volatility options that expire next Wednesday, and that might be just tied with what people believe is going to happen with NVIDIA's earnings, which finally we've gotten there come next Wednesday. So in between, we did hear, I Powell was out speaking somewhere, giving some kind of a press conference, and I don't think he really said anything too hawkish, but I don't think he said anything too dovish either. So kind of right in the middle. Still sticking by everything that he says when he does his press conferences after an FOMC meeting. Now, that aside, CPI and PPI both started to show that, and particularly CPI, that inflation is still hanging out, and a couple of areas where it has picked up again. Now, the Fed is not really coming out and saying that, well, that's going to be a little bit sticky for us next meeting. But I think that what we might get is they just leave rates unchanged. To finish the year, they leave them unchanged. And then we pick it up again in the new year. Now, what do I believe for tomorrow? I think it could be, it's really, I hate to say this, a coin toss, because there's still plenty of downside room. And in fact, the market just could give up the ghost right here and just start plowing through all of our support levels and giving us a much different picture. Now, having said that, how many times have we gone through this where it comes down, stops, finishes, and then launches into the other direction? So I cannot say that Minuet Wave 4 would be all negated unless we come down and we break below where I've labeled Wave 1. And that's at 20,385. That being broken tells me it's not a Wave 4. I'm already hinging on, well, just really, isn't that pretty big when we consider this is 1 and Wave 2 is over here? So, what do I got to do to change that? The possibility remains that this whole thing was Wave 1. Now, we're getting that. I got that coming in from a couple other areas. And my thought process is, it may be, which would suggest against all, I don't want to say odds, but against all outside influences, which are basically that the markets are very overvalued. Interest rates are being brought lower, but then we take a look at the bond market and it's not feeling real well. So yields, at least on the 30, and that again could be okay because we worked for so long with an inverted yield curve, excuse me, that it's just re-inverting. It's going back in the other direction, where we would be looking for the long end of the curve to have higher rates than the short end of the curve. And that could also be what's in process here. So again, how much we're going to take each one of these groups internally to decide what's going on, we got to be careful and allow the market to be the market. So yes, we have the potential where either this high completed Minuet Wave 5, Minute Wave 5, Minor Wave 5, and Intermediate Wave 3, and we're starting down. Now, that being the case, we'd be looking for it to slide again. It needs to really pick up the steam and just start to slide. Now, that would be a give in terms of, oh, okay, so that market must be done, and we're already now beginning to drop in an intermediate fourth wave. Then we would be looking for a lot of things to happen. And again, it could resemble and take on the same aspects that we got in the minor wave 4. And I'm just going to go back to the 4-hour chart, and we can see there's the minor 4. That was July 11th. This was August 5th. That was real quick turn and down. And a lot of it happened to be in response to that. And if you remember, it's like I talked a lot about the gamma atmosphere. We were in a negative gamma situation. And that is during a period where it's just like the sellers are just there and they're going to be whacking. They're going to be just taking everything down. And that's what happened here. And it really kicked in here. And then we got a reprieve. And then it just annihilated everything there. And so if we start to see that again, we're coming from a higher level, of course, and it's a larger degree. But I tell you what, the end result brings us back to that same area. But we're going to be dropping and it'll go faster as we come down here. Now, what I pay attention to within all of this is, again, this is all via spot gamma, and they're a wonderful, wonderful people and have great models. And if we pay attention to them, then yes, when we start to see, and this is something again that I'm noticing this happening, whether it's in preparation for tomorrow's expiration or whether it's just a sign of things to come, where I'm seeing it, particularly like in the spiders today, the point difference between the call wall and the volatility trigger and the put wall was 10 points. That's pretty tight. So the call wall, I'm sure, is going to remain at 600. And in the SPX, that translates to 6,000. That's major. That's a major level that the market has now held off. Why? Because if you go look at expiration for tomorrow, that's all sitting right there. So what we might see, now get this, what we might see through the expiration is that when it happens, all that gamma expires. So we might get a pop in volatility because it releases a lot of what's being held down. So we get a pop in volatility. What could then also create, we get higher vol? Well, it could be that the market starts to really just let go. That'd be one thing. But maybe that just we get a pop in vol, we get a pop in the market, because a lot of things are going to get released. So that frees up where the market and how it can react. So tomorrow's expiration is going to be interesting, and the result of that expiration, I think, will give us a lot of clues. So putting that all together, I'm going to leave my count as is. And I'm going to allow it if it needs to come down to 20,810 or even a little bit further. I'm going to allow it. And again, I know that we got to go by the look and the feel and the size and all of those factors. But these are the things that are getting a little bit turned, and we need to be a little bit more flexible when using Elliott. Now, I'm not changing Elliott's rules. And I'm not saying that Elliott no longer works, because I know that it does. I trade with it every day. So, but what I am saying is that I think that the algorithms and how they function and how they interact and trade are producing elongated fours, this stranger patterns, this one down here, but yet the result that we get is exactly what you'd look for. You know, the start of a larger rally up, and the third wave being dynamic as one would expect. That is where Elliott is true. Elliott stays in place. But this has presented not the most common type of structure. Double ABC, sure. Triple ABC, we or I would see them, but not with the frequency that I'm seeing them now. So again, just minor changes, but not necessarily in how I'm going to label it, and not necessarily what I'm going to expect coming out of it. So I'm going to give you, excuse me, I give both sides here, and those both sides remain the same. We have that possibility that intermediate wave 3 ended here, not minuet wave 3, but we go all the way up. That it was minuet wave 5, minute wave 5, minor wave 5, and intermediate wave 3, all there. Could be, again, still on the shelf, but I'm letting people know. And what's going to help is if we just suddenly cut loose and we start to drop, because we'd be in that type of a position where this could all be 1, 2, and this is 1, 2, and now we're starting on a third. Think about it. Strange 1, stranger 2, and here we are 1, 2, and we're coming down. And we came down pretty hard today. So everything has its place and everything can be considered. All right, let's look over at the S&P. And as we continue to kind of just move lower a little bit here. All right, S&P is exactly the same. And if you'll notice what I've done on both charts is I put parentheses around that minuet fourth wave and moved it on the NASDAQ. I moved it all the way out of the way. So on this one, here we are, right down at that hourly 200, and we're hovering right around it. And so we came down, we broke the 236. We're now heading toward the 382. And I think that's at 59.52. So again, these levels, all right, they kind of held. 59.89 kind of held, and then we went boom, no. But then we went boom, take it back, and then we went boom, no, let's let it go. And they did. So now I think we're definitely heading towards 59.25. We're going to see what holds there. And again, if we're looking for the end of wave 4, it could stop there. But what's going to tell us? I'm going to take it one step further because I keep saying, well, we look for a little bit of rejection type of a rally, and it just moves strongly up. But impulse, I still need to see 5. I need to see 5 clean waves up to give me confirmation that this minuet 4 is complete. And we've not gotten it yet. So with that in mind, that's what we're still looking for. So our support, 59.52. And then down at 59.22, we'll give it the benefit of the doubt, the quarter of a point. So that's the 50%. Same deal. Where wave forward cross wave 1 and definitely invalidate itself is down at 58.09 or 58.10. So I definitely would not be thinking, okay, well, no, this came all the way down there, stopped and rallied. That's going to then put me more in, it's like, okay, either it's all done or all of that is wave 1 and this is wave 2. And then we're going to race back up. Now, again, overvalued, all kinds of things work against that. But we got NVIDIA's earnings, and that might ignite an entire new run for the brass ring. So I look for this, and then again, what I'd be looking for, and if it starts to break these support levels, I'm going to be like, as a day trader, I will be participating in whatever the direction is, but I'm telling you, I'm going to be looking for some clean moves. Because if I have to go 1, 2, 1, 2, and then we really start to drop. If it's that. Otherwise, I've got this ABC, X, A, B, C, X, A, B, C. Everybody's doing triples. They're not clean, they're not pretty, but corrections tend to be that way. Let me just jump up to that daily and let's take a look at what our moving averages are telling us. Well, same deal. You see 20 starting to go flat, 50 going flat, 200 will go flat. They will perform on a daily level. It will start to provide support. In fact, this is likely, if we continue to go low, it's going to go flat right underneath the 50% support line, which is at 59.22. You can give it down to 20, because that's probably where that'll end up. Right now, it's sitting at 59.17. So all right there. And it'll go flat, and it should provide a floor. If they break it, it's going to give us more fuel that we've got a lot more coming. Okay, that is going to be it for today. We do have some numbers tomorrow. Let's just take a quick peek. We have on Friday, we have import and the import price index. We have the Empire State Manufacturing Survey. That's all at 8:30. U.S. retail sales at 8:30. And then we have industrial production capacity utilization at 9:15 a.m. all Eastern. 10 a.m. we have business inventories. And then we have a slew of Fed people out speaking, which is pretty normal for them now. All right. The next Elliott Wave daily update will be on Monday, November the 18th. That's March 15th, 16th. Yeah, the 18th. And over the weekend, I will be putting out a weekly update.